And I'm going to press *1 to activate.
The broadcast is now starting. All attendees are in listen-only mode.
Good afternoon, everyone, and welcome to our monthly webinar series. Thanks for joining us. I am Kenny Elsroth with Professional Staff Management, and we'll be kicking off the webinar this afternoon. Today, we will be covering health savings accounts and flexible spending accounts, and I'll start off by introducing our panelists. Today, we have with us Chuck Phippen, who is our VP and Commercial Relationship Manager with First Internet Bank, and Deepu Sandhi, who's our Director of Customer Support with First Internet Bank. They've been a fantastic partner of ours in our Indiana market and will be our subject matter experts today regarding HSAs. We also have with us David Kyle, Director of Operations with Century 2, and he will be covering the FSA portion of today's webinar. For those who may not know ESG, Century 2, and PSM, we are a professional employer organization. All three of us are sister companies, and we share resources and expertise to best serve our clients, but operate independently in our markets across the country. We provide outsourced HR to businesses by offering the knowledge and systems to help you improve compliance, reduce costs, and increase profitability. We also offer the HR management, benefits administration, payroll services, workers' compensation, risk management, hiring, recruiting, support, and much more. At this point, Chuck and Deepu, I will go ahead and let you share briefly about First Internet Bank, and then you guys can dive into HSAs. Oh, also, also just as a reminder, as we're going through the presentation today, if you do have questions, feel free to type those in, and we will go over them at the end of the webinar today. So go ahead, Chuck and Deepu, I'll let you take it over.
Thanks, Kenny. Really appreciate it. Appreciate being on the call and invited to join. Kenny and Scott here at Professional Staff Management have been great partners to our bank and had a host of opportunities to work with clients and see them do a great job just firsthand. We're a bank that's kind of an entrepreneurial bank. We're one of the very first and only banks in the country in 1997 to be formed as an internet-only bank without branches. We are publicly traded under the stock symbol INBK. We were founded in 97 and we've grown tremendously since. Today we're a full-service commercial operation with commercial loans and deposits, retail banking, investment real estate. We have a nationwide footprint. Anybody that can find us online can do business with us. And as you might guess, because we don't really have a brick and mortar system of branches out there, our rates on savings and CDs and mortgages are among the best in the nation. But what's great is we work for a small community bank that's about $1.7 billion in assets, and all of our decision makers are right here in Fishers, Indiana, in a brand new facility. Deepu's office is right below mine here on the first floor, so lots of ability to be flexible and work with each other face to face, which is what's interesting and enjoyable about our company. Deepu is really our expert on HSA accounts and spends a lot of time handling not only the product, but handling our customers and any questions and setup needs. So he has a lot of the information here for your presentation.
Appreciate that, Chuck. And so what we're going to do is talk about HSAs today, and so what we're going to cover is just these basic 4 points, and then take any questions that you may have. So we're going to look at exactly what a health savings account is and how does it work, what the advantages of a health savings account are for the employee, what are the eligibility requirements with HSAs, and then as an example, and contribution limits can change year to year, but what they are for 2016 to give everyone kind of an idea of what takes place in those accounts. So this is the agenda that we're gonna go over. So let's start with exactly what is a health savings account. An HSA is going to be a tax advantage account that can be used to pay for qualified medical and healthcare expenses. And we'll get a little bit more into what a qualified medical and healthcare expense is momentarily. Both the employer and the employee can make tax-free contributions to the account. And these funds can be used to pay medical expenses, traditionally with a check, but you're also issued a debit card, so you'll be able to use that as well in accounts, health savings accounts with First Internet Bank also allow free bill pay. So we really give you all the options that you would need to use to pay bills related to a health savings account. The funds are portable, which means you can take your funds no matter where you work, as long as you meet the eligibility requirements. So, what are the advantages of an HSA? Off the bat, the biggest advantages are that they're a tax advantage account. So the contributions that are made are going to be tax-free. And then the distributions that are used to pay qualified medical expenses are also tax-free. The question we get from time to time is exactly what qualifies as a medical expense. And let you know that the IRS has actually published a document that's 25 pages long. If anyone really wants an in-depth review of what those expenses are, but they can range anywhere from buying contacts to prescriptions to x-rays, surgeries, and it really does go in depth as to the medical expenses that are available for an HSA. Along with the contributions and distributions that are going to be tax-free, any interest that's earned will be tax-free. So our HSA at First Internet does pay interest, and so that interest will be tax-free. One of the big differences between an HSA and say an FSA is going to be that the funds in your account are allowed to roll over from year to year. So if you don't spend it, you don't lose it. You can continue to save and build your balances for future medical expenses. If you have a year where you're in good health or you didn't have any expenses, they carry over. There's no penalty to carry those over. And like we mentioned earlier, funds can be transferred from one HSA to another at your discretion. So who's eligible for an HSA? To be eligible for a First IB HSA, and really for an HSA in general, you must be enrolled in a high deductible health plan that meets the IRS guidelines for the annual deductible and out-of-pocket maximum, and we'll get into that in a moment. Every year, the government's going to establish what those deductible costs and out-of-pocket limits are to determine, whether that health plan is qualified. But as long as you are in a government or as long as you're in a high deductible health plan that meets the IRS guidelines, you're going to be eligible for this checking product. And to kind of give you a little background on what the eligibility and contribution limits are, this is just for this year, but this will tell you what this slide here kind of gives you the information on what an individual plan is, what a family plan is on the deductible. The key number is going to be the contribution limit. On an individual plan, a person can contribute up to $3,350, and for a family plan, it's going to be $6,750. If you're 55 or over the age of 55, you get an additional $1,000 that you're allowed to contribute to your plan. And as we stated earlier, these requirements and limits are reviewed and can be changed per calendar year by the IRS. So, like I said, this was just a general overview of what the HSA is and how to qualify for it and what you can spend it on. I'm sure there'll be questions afterwards, but I just wanted to go ahead and go through these slides, and now I'm going to pass that back over to Kenny.
Thank you, Deepu. This is David, and I am going to cover today the sections on flexible spending accounts, FSAs. And so first question always is, well, is there a difference between the flexible spending accounts and the health savings account? And there is. They are different. Both do have tax benefits that the employees can set aside for their medical reasons and reimbursements. However, the HSA, as Deepu mentioned, is only available to individuals that have the high deductible plan. There's no open enrollment period for the health savings account, and then changes can be made at any time when you have an HSA. These are different than the flexible spending accounts. So the FSAs, even though there are no eligibility requirements, the contribution amounts can only be adjusted at open enrollment or during a life-changing event, and so there are some differences between the two. And today we're going to talk about the different flex spending accounts, the health FSA account, which is governed by Section 105, the daycare and dependent care section, which is governed by 129, a bunch of tax codes, and the limited purpose. So starting with the health FSA, it is for reimbursement of medical expenses that is not covered by insurance, it's not your premiums, and it can cover over-the-counter medications or anything that's doctor prescribed. These expenses, as Deepu mentioned, based on that long document of all the things the IRS puts out of what is actually covered, it is a extensive list. Some of the things, orthodontia was mentioned, dental, vision. Then there's also some non-custom things that you might not think of would be covered under, such as SPF sunscreen, drug addiction treatment, chiropractic, lab fees, things of that nature that are outside that you're having to pay for that you can still pay for through your FSA. There are weight loss programs that you can use your FSA for. Weight loss, if in the event that it's specific diagnosis of a disease by a physician, such as related to obesity, hypertension, or heart disease. So there are certain programs, gym memberships, that can be actually used as a part of your FSA if it is doctor prescribed. You must have been offered a qualifying ACA group health plan in order to participate in the FSA. Different from the HSA, the FSA funds are claimed up front, so it's front-loaded. At the beginning of the enrollment period, your annual election amount is placed inside the account and is available for you to use immediately. The funds then are reimbursed through the year through your payroll deductions and placed back into the account. Health FSAs are also subject to COBRA. Those of you not familiar with COBRA, in the event you were to lose coverage of your insurance, COBRA allows you to continue coverage over a period of time through paying the premiums on your own without being actually an employee of the company. This FSA, health FSAs, are also a part of that COBRA coverage, and you can elect to continue them even after you've lost coverage through your employer. What is the maximum for the health FSA this year? You can elect up to $2,600 for the 2017 plan year. All out-of-pocket medical expenses, vision, dental, and these are expenses that you're going to be paying for anyways. So spending it through this pre-tax account, you can increase your take-home pay. Anything that you apply to your pre-tax savings on your payroll account reduces the amount of taxes that you have to pay on that amount if you were contributing to an FSA, and this leaves you less taxes taken out of your check and more in your net pay. Different employers, you can elect up to the $2,600 for 2017, but also the spouses may be eligible to elect $2,600. So if the spouse is with a different employer or the same employer they can still elect, as long as they're married, to have a separate amount. Mentioned that the changes mid-plan year are only allowed with a qualifying life event or in the event if you had a reduction in hours. So unlike an HSA, this is a use it or lose it plan. So it does involve some year planning at the very beginning of the enrollment period of what your expected expenses will be for the year, so that you plan appropriately and using the full advantage of the actual health FSA. Affordable Care Act. It peeks its head into a lot of different areas, and this is including one of them. They have offered us some technical guidance, and it's labeled 21354, and it's basically provides certain provisions of the Affordable Care Act. It includes things for the health FSA, among other things. And worksite employees that don't offer a health plan, FSA is restricted only to the dental vision dependent care. So if you aren't offered that coverage, you don't actually get to participate in the health FSA, but you can participate in the dental vision and dependent care. There is, with a lot of things ACA related, Affordable Care Act related, different interpretations. The largest interpretation of this is that if an employee takes individual coverage to the exchange, so they haven't been offered coverage to the employer, they've gone out to the market exchange to secure individual coverage, that they're actually not able to participate in the health FSA, but they would be eligible to participate in the dental, vision, and dependent care. One of the smaller interpretations of Affordable Care Act in this provision is that actually they can take health FSA as long as they are not receiving the subsidy for the premiums. So this is an area that has been interpreted and has been determined by some that it is okay as long as you're not actually receiving a subsidy as a part of the exchange. So just a reminder of the couple conditions. You have to use it only for qualifying expenses. You can use a card, or you can get resubmitted reimbursement through a claim reimbursement. You should keep all of your receipts, itemized statements, and that doesn't necessarily mean just your credit card receipts, but actually what you've spent it on and the actual purchase itemizations. In the event that you are asked to provide these things to substantiate what you have used your FSA spending for. The other type of flexible spending account is the dependent care. Dependent care spending account is eligible for children that are under the age of 13. There are some actually new changes in the status that may make this a little bit flexible. A provision is, however, that both spouses must be working. You can also have adults that are a dependent, so dependent parents, then one that is actually you can claim as a dependent would be eligible for some of the dependent care reimbursement. In the event of a divorced family, even though one parent may be claiming them as a tax dependent status, the other parent still may be eligible to provide dependent care and then be allowed for the FSA reimbursement for that as well. Some provisions do allow for the house cleaning of the as a reimbursement, but it has to be very specific that it's for the well-being of the actual cared for dependent, and if it's a part of a larger payment that includes maybe daycare after school when they come in, but house cleaning during the day, all of that has to be itemized out and making sure that your reimbursement is very specific only to the dependent care responsibilities. Another opportunity for dependent care is if you have a family member that is taking care of your dependent that's under the age of 13. You can reimburse that family member just for those times of taking care of that dependent person if that's how you're paying your family member. However, the family member must be over the age of 19 in order to qualify for being payments that are under this dependent care FSA. So what's the max? $5,000 is the federal maximum you're allowed to be reimbursed for the dependent care. If you are taking the $5,000 maximum pre-tax, then you're not going to be allowed to actually file it again or get that when you file your taxes, get that exemption a second time. $2,500 for each filing separately but married for spouses. And it's available on every paycheck. So this would be an option where it's not up front loaded, but actually as your year goes on and you're making the contributions, that's when those funds become available. So if you have a regular budget or schedule for what your daycare costs are every month, every week, you can then plan accordingly for your paychecks to have those amounts available at each paycheck. When it comes to filing your taxes, you must file the 2441 and that your dependent care is actually designated on your W-2 the amounts that you've contributed. So this is something that's on your W-2 that gets reported to the IRS. Last one is the limited purpose FSA. So the limited purpose is a flexible spending account that can be used in concert with the HSA. And so it's not a regular FSA, it's a limited purpose. And the reasons that you can use the limited purpose in coordination with an HSA is for the preventative care of vision or dental, and may be also reimbursed for a limited purpose for post-deductible FSA, which means you're on your high deductible plan with your HSA, you've maxed out your deductible for the HSA. At that time, then, any expenses you could use for your limited purpose FSA reimbursement. Expenses that you have incurred actually before you've reached your maximum deductible, those are not going to be eligible, so it has to be after. And you must provide, again, the substantiation showing that the deductible limit has been met, and the limited purpose FSA must be dental, vision, or post-deductible only. So those are the topics today for HSA and FSA. I'm going to give everyone kind of a chance if they wanted to submit some questions to do that. And in the meantime, tell you about our upcoming monthly webinar. Part of the series, the next one will be on December 7th at 2 p.m. Central, 3 p.m. Eastern, and it's going to be on the ACA reporting year for year end. And that'll be presented by our special guest, Howard Cox. And hopefully you'll be able to attend and participate in that upcoming webinar. Haven't seen any questions come in yet at this time. I will open it up for Deepu and Chuck if they had any other thing they'd want to add.
I guess the only thing I'd add is just there's a lot of questions that come to us about, the fact that these accounts are, they have certain tax structures to them, and, people always worry about tax consequences. And I think what I've always told a lot of clients at the end of the year is it's usually very easy with our bank to download, get reports from us on where your contributions are that you can print off, get an annual statement, take that to your tax advisor along with, all of your medical expenses. If you're on a major website, you can download those as well. But I literally spent probably 5 minutes downloading those 2 pieces of information to give to my CPA, and they take care of getting everything filed. But if you have a mistake, you over-contribute, you have a mistake, and you didn't use it for a qualified medical expense, I think those things are all correctable if you work with your CPA and get documentation. But those are some questions that we typically get at the end of the year. Haven't had it happen yet, but again, I think when you file taxes, you're able to make those amendments and keep documentation of it. And conversely, too, a lot of people can roll over HSA accounts into new HSA accounts if you're switching banks. It's a process of just having that fund taken out of one bank account and sent to the other. Can you have more than one HSA account at a time? You can. I think it just becomes very difficult to manage. You can only have those contributions probably going one direction from your payroll. But the rollover process is something that can be accomplished as well if you're moving from one account to the other to use a different bank account.
Excellent. That's good information. Well, at this time, I don't have any other questions coming in. Hopefully, then, we have satisfied everyone's expectations. Certainly, if you get a question, something later comes up, feel free to contact your human resource representative. They'll be happy to get in touch with the benefits department necessary or answer any of the questions that you might have. I want to thank everyone again for attending this month's series seminar. We look forward to having you next month, and enjoy your rest of your day. Thank you.
Thanks.
Thank you.